You're now listening to the Supply Chain Secrets Podcast, the ultimate insider's guide for all things ocean shipping. Presented by NYFI.
Hi, everyone. You're listening to the Supply Chain Secrets Podcast. I'm your co-host, Caroline Weaver, and with me is Lars Jensen. Lars, how are you doing?
Great, thanks. Calling in from South Carolina outside of Charleston today.
Amazing. Is it sunny and warm there, or is it fall weather?
It's relatively cool. I was just down having a look at the weather over the beach, overcast and fairly cold.
Well, beach is still nice regardless, I would say. Let's go ahead and get started. We've got a lot of content today. As always, let's maybe start off with our rates. Where are we at in the market right now?
Yeah, I mean, we are at the point where if we look at the quoted rates from the SCFI, we're still seeing relatively minor increases into Asia-Europe on the order of about $100 per TEU, give or take. We are also seeing some increases on the Trans-Pacific still for the third week in a row. If you look over the past 3 weeks combined, we're up some $500-$600 per FFE as per the SCFI quoted rates, which of course sounds like a strengthening in the market. If we look instead of at the quoted rates, but at the rates of cargo actually loaded, so the NYFI index that we're looking at, we're not seeing that strengthening. And by now we should. We know there's usually a 3-week lag time between when we see the quotes until we see what is actually loaded. So we should be able to pick up in the NYFI and increase. And if I look at the China to US West Coast, that is not the case. We still see a marginal decline in the rate level. So we are not seeing that optimism that comes through in the SCFI on the NYFI loaded cargo out of China.
But if you zoom out, are we seeing any general trends that also align with the rate increases of the SCFI, like for other geographies?
Not necessarily. And let's keep in mind the NYFI right now, we're focusing on the Pacific. The interesting thing is, it's actually a good point of making sure you look at the details. If you only look at the headline, if you look at, again, let's take the NYFI, there is an overall NYFI Asia-US West Coast. That one definitely went up. But the SCFI, because it's from the Shanghai Shipping Exchange, it specifically measures Shanghai to Los Angeles. So it's China to US West Coast. And if we look at the NYFI, even though the overall index went up a bit, China to US West Coast actually still went down. And that's the one that's relevant to compare to. Where we do see a strong level of increase also in the paid spot rates out of Southeast Asia and Northeast Asia, not out of China. That market remains weak from a rate perspective.
Okay. Yeah, that's a good clarification on the nuance and paying attention to the details. Let's talk a little bit about where we're at with Asia-Europe and Asia-US East Coast rates. Are we seeing anything specific there?
Yeah, the interesting thing is, and I would want to look at it maybe in a slightly different light, because we should also remember when we look at spot rates, they're always measured in nominal terms. So basically on today's dollars. But as I think has been on everybody's radar, not just here during the trade war, but also in recent years, is the impact of inflation. And inflation, of course, should at times also be taken into account. Now, the question is, how do you account for inflation in something like freight rates? There is no specific index for that. You can try and make an approach and say, what if we use consumer price indices? It's not a complete one-for-one, and you can certainly have different views on how to then try to address inflation on freight rates. But if we use the consumer price index from the perspective that most of the cargo moved from Asia to US and Asia to Europe are actually consumer products. So in that light, putting the freight rates into the context of a cost component going into the goods. If I take inflation into account, Asia-Europe rates are now lower than where they were pre-pandemic. If I look at the Trans-Pacific, Asia-US East Coast is also lower than pre-pandemic. Asia-US West Coast is still slightly higher than pre-pandemic, by some 10-11%. So if we take inflation into account and look at what is the actual underlying freight rate costs here for moving cargo, we are already below where we were pre-pandemic.
So I guess that's good news for shippers. Lower rates are usually a plus, but then if you're looking at it with the nominal rate, it might still be higher than what you would potentially like to see, but interesting to kind of dive into that.
Yeah, and of course, reality is a lot more nuanced, because you can also argue costs are higher than pre-pandemic. They are. Let's just take one specific component. Pre-pandemic, there was no such thing as low sulfur rules. So you were using good old-fashioned heavy fuel. Now you are using low sulfur fuel, or of course, in some cases, you're using scrubbers, but you still need to then pay for the scrubber installation and maintenance, of course. Fuel costs are up, not necessarily as much as you might think either. The world is complicated here. Last week, we actually had some of the lowest fuel prices we have seen since the very, very early days of the pandemic. And furthermore, the premium you pay for low sulfur fuel is also at record low levels ever since the low sulfur regulations were introduced.
Interesting. It's also interesting given the context of the IMO talks that we, have spoken about in the past couple episodes. So seeing the low fuel rate is kind of interesting.
Mm-hmm.
All right. Well, let's talk a little bit about where we're at with tariffs and trade deals. Has anything new come out in the last week?
Yeah, I think the main one to point out is the four, let's call them trade deals that seems to be coming out between the US and then Thailand, Vietnam, Cambodia, and Malaysia. At a high level, there's no change in the reciprocal tariffs. If that's what you're looking at, there's actually no change. The trade deals include the reciprocal tariffs at 19 and 20% where they were prior to these trade deals. However, the devil is very, very much in the detail if you're a US importer, because in all of these deals, there is exemptions. So for two of the countries, they're already outlined. For two of them, that would be forthcoming. And that would mean you would have to go in and look at a very, very long list of exempted commodities and look at, is my commodity included in that list? But for two of the trade deals, I think it was the ones with Malaysia and Vietnam. The details were already in the trade deals for the two other ones. As I said, they will be forthcoming, but they will be on the list. There was an executive order about a month back with an annex of hundreds of different commodities. I believe there were 700 or 800 different commodities that might be subject to exemption. The key word here be might be, because it's not yet determined exactly which ones they are. So not an easy task for the shippers, but you have to look through the details and find out, are my commodities exempt or are they not actually exempt? And furthermore, there's no timeline right now in terms of when this goes into effect. So that's the main part of the news. Then the more pertinent one I think everybody's watching is there going to be a trade deal with China? Reality is right now we don't know. What we do know is that the U.S. Treasury Secretary Scott Bessent was out a couple of days ago saying that the 100% tariff threat on China here from November 1st is for now off the table. Trump is likely going to meet with President Xi here over the next, I think it's a day or two, and then we'll see if the deal comes out. There's, of course, been a lot of press coverage in terms of speculation from various sources what this will or will not include. Let's stress this is all speculation. Everything we see in the public domain around that right now, either from the US or China, should be seen as part of a negotiation game. I wouldn't really lend a lot of credence to any of that coming out just now. Let's wait and see until the meeting has been done and what has actually been agreed.
Well, it's nice that they at least let us know ahead of time, a few days in advance that the 100% tariff is probably not going to happen, but guess you never know. Things could change pretty quickly.
Exactly. I guess you never know. And again, this might be me being jaded from the trade war over the last 6 months. It's great there's seemingly some clarity with the four Southeast Asian countries. But if we look at the development over the last 6 months, we can either be optimistic and say that's great. Now we have surety. What's the regulatory regime going to be between these four Southeast Asian countries and the US for the next long, long period? Or we can say that's great. We have a deal for now, but who knows whether that deal then gets changed a week, a month, or 6 months from now. Reality is these things tend to change very rapidly and for seemingly random reasons, which leads to the third element of tariffs over the last week, the apparent introduction of a new 10% tariff on Canada. So far, it is not introduced. So far, it only exists on Truth Social from Trump. But basically, he became aggravated at a political advertisement run by Canada. So now he wants to put 10% additional tariffs on Canada. Whether it will happen or not remains to be seen, but it fuels into this uncertainty on trade regimes. And let's be clear here, a lot of the tariffs are rooted in U.S. trade policy. We may or may not agree with it, but that's what it is. But increasingly, we are beginning to see tariffs that are not rooted in trade policy. This new 10% on Canada is clearly not rooted in trade policy. It's rooted in politics. We have two other examples that are rooted in politics. One is the 25% penalty tariff on India, which is because India is buying Russian oil. And we also have the 50% tariffs right now on Brazil, which is again due to a political disagreement where Trump doesn't like how former President Bolsonaro is being treated down in Brazil. So increasingly, as we see tariffs being rooted in political elements and not in trade policy, that simply makes the trading environment more volatile and more unpredictable.
I've been holding out hope because I saw the posts about Justin Trudeau and Katy Perry maybe in a relationship, and I think they could potentially help mend this trade war between the U.S. and Canada, bring some positive news for the countries.
Fingers crossed.
All right. Well, we'll keep an eye on that. We've been hearing a lot about a hurricane that is approaching the Caribbean. I think it'd be prudent for us to talk a little bit about what impact that might have on ocean shipping.
Yes.
Could you talk about that for us?
I definitely can. I mean, we should let everybody know we are recording this one relatively early morning, US East Coast time here on Tuesday, literally as the hurricane is making landfall in Jamaica. So just to make sure that this is the time slot where we're doing it. This is important not just for anybody involved in Jamaica, but for basically everyone in the American continents, because this will likely have massive repercussions. This is not a small thing. At this moment, it is now the most powerful hurricane measured anywhere on the planet here in 2025. Category 5, it is likely to create a significant amount of destruction in Jamaica. The port in Kingston is very low lying and is basically going to take the full force right up front, both in terms of wind, but also in terms of storm surge. At this point, we don't know what the level of disruption is going to be. Of course, it means already now, and we've seen that the last couple of days, vessels are deviating around the storm. But here's why it matters far beyond just the Caribbean. Kingston is the fourth largest container transshipment hub in the region. Last year, it handled around 2.5 million TEU. So it's a crucial hub. Taking that hub out means that the container lines have a choice. Either you have your vessels wait at anchor somewhere else, waiting for the port to reopen, which is unlikely because the carriers will take one look at this and say, we have no idea realistically when the port is going to be operational. We don't even know what damage we're looking at. So the other option is, okay, the services that were supposed to do transshipment in Jamaica, in Kingston, deviate to some of the other main hubs in the region. That would be Panama, it would be Cartagena down in Colombia, it would be Caucedo up in Dominican Republic, it would be Freeport up in Bahamas. Those would be the most obvious deviation points. These are also very large hubs in themselves. The problem is if you take the fourth largest hub out of action and then you try to deviate the cargo onto the four other hubs, that creates a significant element of risk for congestion to appear in those other hubs that suddenly see a surge of cargo. The most direct impact would be on the deep sea services that already now use Kingston as a transshipment hub. If we disregard local feeder services, it's 12 major deep sea services that use Kingston. One of them is actually an Asia-US East Coast service. It's the one operated by ZIM, the ZCP. Sea is on board. They call it the Amberjack service, so that one is directly impacted. The other 11 deep sea services tend to be services connecting South America to especially the North American East Coast. There are also a few services that operate on the Atlantic, typically Europe to US East Coast, down to Caribbean and back. These are all going to be directly impacted. But every other service is likely to then also be indirectly impacted. If we again go back and say services from Asia to US East Coast, a lot of those go through the Panama Canal and tend to call at least one of these major hubs in the region. So again, either in Panama, Cartagena, Caucedo. But to the degree the spillover now from Kingston creates congestion in those other hubs, all these other services could also now be subject to delays as a ripple effect. So this is down to, sure, it's a hurricane. The devastation is going to be specifically on Jamaica. But from a container shipping perspective, any shipper that moves also Asia to US East Coast or moves between South America and the US East Coast, not just in the Caribbean, but also South America to US East Coast, they should all already now expect potential delays in their shipments, irrespective of whether they're on a service that specifically we're using Kingston as a transshipment hub.
So there's going to be probably some pretty widespread impact to that region, or even if you're just shipping through there. I think that's a good call out to keep in mind, especially if you start seeing delays in the coming weeks. Generally, when the hurricane comes through, you hear a lot about it as it's approaching, when it approaches, maybe in the day or two after. I mean, depending on the level of damage, you could have pretty severe cleanup efforts that are required. So you might end up seeing the port closed for quite some time, potentially. So
Yeah,
it's a lot of uncertainty in that area right now.
exactly. And whether the port will then be closed for a few days and no major damage, or whether it's going to be a much longer term affair, we simply have to wait and see the fallout before we know that.
Yeah. And I guess even if the port is in decent shape, then you also have to account for people getting to the port, like people that live throughout the island, if the roads are down and there's debris in the way.
Yeah, exactly.
Could be a lot. All right. Well, we'll keep an eye on that one. The last topic that we had today was to talk about some U.S. policy least a meeting that they're having today to talk about it.
Yeah, I mean, there's a hearing in Senate. Basically, I mean, you have a political push in the U.S. to try to rebuild the U.S. shipbuilding and rebuild a U.S. commercial shipping. That's a political agenda, and there's a hearing surrounding that. Basically, what can be done, what should be done, that goes on. It has to be seen in a broader light. This is also the perspective where, for example, USTR falls under. So
Yes.
we'll see. I mean, this is a political hearing. It doesn't mean that any decisions are going to flow from it, but it's going to help shape some of the decisions that we see going forward. We could potentially hope that maybe going through hearings would be a way before there is any new regulations coming, that those regulations might be rooted in some better thought out consequences. I mean, if we take USTR as an example, as we all saw, the first USTR proposal earlier in 2025 with a repeat hammer on supply chains. It was only then after hearings that it was modified to at least eliminate some of the fallout. Maybe this process would mean that any subsequent regulations would be, let's be honest, be somewhat more well thought out than the first ones. Not that the current version of the USTR is without problems.
Yeah, I wanted to ask about that. So we're a couple weeks into that being implemented. I think there were some obvious outcomes in terms of OOCL, Costco fees that they'd have to pay, but are there any kind of more interesting nuances that have come out of that?
Yeah, the interesting surprise that came out last week was actually on ACL. They're operating an Atlantic service, have been doing that for decades. And the interesting fallout from this is they are operating relatively small container vessels around 3,600 TEU, which means under current USTR rules, the anticipation was that they would be exempt. Because under those USTR rules, vessels that are below this threshold of 4,000 TEU are exempt. But here's the kicker. These are not pure container ships. They have a limited capacity also for general cargo and for ro-ro. As far as I've been able to ascertain, is something like 10% of the cargo could be ro-ro. But that apparently means in the eyes of the USTR regulation, they now have to pay the fee because they're not pure container ships. In this case, for ACL, that means an annual cost likely of $34 million. So far, the CEO of ACL has basically out saying that this might, in the extreme, force them to shut down the service.
Wow. Okay. Very unexpected. I wonder, do you think they would be able to kind of protest the fee and make a case
you
against
can say
it?
that's basically what they're doing right now in highlighting the potential impact of this. Maybe also what the listener should be aware of is ACL is headquartered in the US. So from that perspective, of course, the company's perspective is that this is very much unfair. So it's a US company being hit. As everything in shipping is global. So yes, it's headquartered in the US, but they are also ultimately owned by Grimaldi, which is actually an Italian.
Okay. Well, it's definitely an interesting outcome. Like you mentioned, when this was first announced, it was a lot of hoopla about what would happen. It was a very broad piece of legislation, and then it got tailored down. So I wonder if it'll further be refined. But it'll be interesting to see what comes out of this reviving commercial shipbuilding meeting and if any policy is then later enacted. All right. Anything else you wanted to touch on today?
No, I think that is all the relevant parts for today. I think the last coming year is, I mean, let's just hope that the impact of the hurricane in Jamaica is not going to be as devastating as we might fear from the size of the hurricane. But we'll have to let the next day or two unfold and see what happens.
Yes, definitely agree. And I hope everyone in that region is taking the right precautions and staying safe. Category 5 is no joke. All right. Well, thank you everyone for tuning in. We'll be back next week. If you haven't already subscribed to the podcast, be sure to do that. We're on Spotify, Apple Music, YouTube. And until next week, I hope everyone has an awesome, productive week. We'll talk soon.
Thanks for listening to Supply Chain Secrets Podcast, presented by Nice Shacks. Be sure to subscribe on your favorite podcast app. Want to be a part of the show? Register to attend a live recording at the link below.